Hi, it's Monday, June 7th. I'm Greg Dorsey here at Leeb.com, where the hits just seem to keep on coming. But unlike with your average top 40 radio station, these aren't the hits you want to hear. Following last week's action, which was capped off by Friday's dreadful trading, stock sold off sharply again today. The scope of the selling was broad-based, with decliners leading advancing issues by a 6-to-1 margin. Small stocks slightly underperformed, and volume was fairly heavy. Healthcare, utilities, telecom, the traditional safe havens did manage to stay in the green, as did gold stocks, as investors shed risk in droves. Gold, really the only money you can trust these days, managed to close at a record level. Forecasting the market's next big move from here is really a tough one, as we're sitting at a pretty precarious point. On the one hand, the major averages are still trading above their May 25th lows, but just barely. If we can hold those lows, there's a good chance that stocks will stage a rally, although any move is likely to fall short of the April highs. On the other hand, stocks were unable to climb above their 200-day moving average recently, and the decline has shown no signs of exhaustion yet. With the momentum seemingly still on the downside, and investors apparently eager to lock in some of the profits they've garnered over the past year, we could see much more selling in the days ahead. If we break 1040 or so on the S&P, the next level of any real support is down around 1010 or around 9400 on the Dow Industrials. As much as I hate to say this, the March 2009 lows were not a bottom in the classic sense, in that we never had a retest of those lows. And it's not out of the question that we could revisit those lows at some point. Continued problems in Europe and more signs of economic weakness here in the U.S. will help to get us there, but hopefully not in any hurry. That's it for now. Be sure to keep checking in, because these are interesting times, as the old saying goes. That's all for now. Thanks.